Hello and welcome to ET Market Smart Talk. Well, I'm your host, Shretaj Anand, and today we have with us Abhishek Agrawal, who's the CFO of Embassy REIT, to discuss key factors investors should consider before investing in REIT and the recent developments shaping the Indian REIT landscape. Welcome, Abhishek, and thanks for joining us.
Thank you, Shadish.
Thank you so much for taking the time out. And let me just quickly start off with the RBI thing. RBI maintained status quo stance in the October policy framework, but there were a host of other measures announced to maintain liquidity in the system. So, how are you reading into the whole statement?
So, Sitish, what we saw is that RBI actually maintained status quo, but then the stand is more dovish now from
Okay.
the June stand saying that there is no room for policy and now creating room for policy. We think this is a clear indication that there can be a 25 to 50 basis point cut in the near future, which is
Right.
positive for the industry, and for REIT industry, it is specifically very positive. And on the liquidity measures, see, these measures are very positive for the market. There will be
Mm.
more and more transactions. The M&A velocity of M&A transactions will increase. More liquidity can come in the market for trading equity shares, IPOs. So overall, we see that it is a very pro market stand that the government is taking.
Absolutely. Let's come to talk about the REITs. In fact, how do SEBI's recent amendment change in the classification of REIT, and what does it mean for investors per se as well?
So, Kshitij, we think that it is a transformational move, and this will
Mm.
act as a catalyst for the next phase of REIT growth in India. Now, what it will do specifically is that it will have a better clarity on what the product is from hybrid to equity. There will
Right.
be broader investor participation. A lot of analysis will go
Mm.
into it, and not only institutional, there will be non-institutional participation also that will increase. And
Right.
more specifically, it will increase the liquidity because of classification as equity. What can happen is now we have a potential to get included in the equity indices, because
Yes.
of which passive money can also flow in. The limits
Yes.
of mutual fund investment was constrained by all the limits of the hybrid product and all.
Mm.
Now that goes off, and there can be more participation from the mutual funds. The retail investors can participate more because they have clarity of what the product is. They will be
Mm.
able to participate more indirect through their mutual fund exposure also. So
Mm.
overall, we think that it's a very positive move.
Absolutely, indeed, a positive move. And when we talk about REITs, we have to talk about global standards as well. So, in what ways do these changes bring Indian REIT closer to global standards?
Well, Kshitish, see, globally, the REITs have been classified as equity. You take example of US, Japan, Australia, anywhere. It was always classified as equity, and there was a lot of
Mm.
confidence from the investors on this asset class because it is a low risk, high return asset class, and hence it
Right.
was also part of the equity indices everywhere.
Right.
So with this move, I think we are getting closer. We have the potential to get included in a lot of indices, and with equity classifications, we will be aligned to the global practices.
Absolutely. And now that we are talking about REITs, how can we not talk about InvITs as well? So, who should invest in REIT and InvITs, and what is the ideal time horizon which investors should sort of take care of and they remain invested for?
Very good question, Sitish. I think everybody who is looking at a safe investment should invest in
Mm.
REITs and InvITs. I mean, the way to look at it is these are investments which is reducing the beta of your portfolio. It is improving the return profile, saving the money which is invested.
Sure.
Hence, we think that anybody and everybody who is looking at mid-teen returns and stable returns with low risk profiles should invest in this.
Yeah.
Both long-term, short-term investors can invest, but an ideal situation is for long-term horizon, 5 to 10 years,
Okay.
because these are backed by real assets, and the true potential you can get only if you invest for 5, 10 years. That's the ideal way.
Absolutely. 5, 10 years or 5 to 10 years, something which is an ideal time horizon if someone is looking to invest in REITs or InvIT. So, what role do sort of REITs play in the broader context of India's commercial real estate market, and how have they sort of influenced market liquidity in the past, and I'm sure how it pan out in the future as well.
Yes, so a lot of these things gets unnoticed, but if you look at it, I mean the REITs, have institutionalized an unorganized sector, which was, I mean, commercial real estate was always thought as an unorganized sector, but this has
Mm.
institutionalized it. It has increased the confidence of the investors in this sector.
Sure.
The investors were always wary about the sectors, the hassles of the sector,
Mm.
which one of them was liquidity. And now with the advent, I mean, with the coming of REIT in India, you have the possibility of trading commercial real estate at will, which is
Right.
something unheard of. So this is a positive thing. The next thing is that price discovery in commercial real estate was also one of the things that was always talked about. Now with REITs, there's an efficient price discovery mechanism.
Mm.
And more importantly, you see, it has democratized the whole commercial real estate investing. Think about a person who is sitting in a grade B, grade C, or grade two, grade three tier cities, and
Right.
trying to invest in commercial real estate of cities like Bangalore, Mumbai. So earlier it was not possible. With REITs now, this the whole
Mm.
geography has changed, the whole game has changed, and now anybody and everybody sitting in any part of the world can invest in the
Right.
commercial real estate story of India. So that's how REITs have transformed, and SEBI has played a pivotal role in that. And
Yes.
you look at the country. If let's say the country has to grow and attract global corporates to India to work out of India,
Mm.
there has to be office that has to be provided to them, which is grade
Mm.
A. And REITs today are doing exactly the same.
Absolutely. And, someone who has already invested in one of these instruments. So, what factors should investors sort of consider when evaluating different REITs for investment, such as, it could be asset quality, management track record, dividend yield? What could be those factors, according to you, Abhishek?
Absolutely, Siddesh. So, see, dividend yield and the total return is one of the factors. But apart from
Okay.
that, there are qualitative factors. Like, for example, the investors should look at what are the quality of the assets, what are the
Mm.
quality of the tenants, what is the transparency, the level of disclosures, and the management track record.
Okay.
These are the key points, I would say.
Absolutely. And finally, so how do sort of REIT contribute to portfolio diversification, and what role do they play in balancing risk and return?
So, I mean, REITs are a very good measure through which an investor can diversify their portfolio, because one side is equity, the other side is like fixed income product, and then there is REIT, which allows them to have a feature of equity while investing in the physical real estate also, because REITs are backed by physical real estate, and so they get their exposure in commercial real estate, and hence the portfolio diversifies. See, REITs also are low beta stocks, so they
Yes.
reduce the risk of your whole portfolio while maintaining the growth level, while maintaining the returns and the yields for the investors. It also provides you regular cash, so you have an opportunity to reinvest that cash wherever you want. So that's how REITs actually sit in your portfolio well. And not to forget, I mean, if you look at last 1 year return, the returns of the REIT, when people say that it would be around a mid-teen return, last 1 year return has been better than the Nifty returns also.
Absolutely. Well, on that positive note, Abhishek, thank you for sharing your insights on REIT policy changes and investment strategies. This was truly insightful for our listeners as well. And to our audience, stay tuned for more episodes on ET Market Smart Talk. Thank you so much for your time, Abhishek.
Thank you, Satish.